Ladies and gentlemen, good day and welcome to PN Gadgil Jewelers Limited Q3 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Bharti from Nuvama Wealth Management. Thank you and over to you, sir.
Thank you, Shruti. On behalf of Nuvama, it is our absolute pleasure to welcome you all to PN Gadgil Jewelers Q3 FY26 earnings conference call. From the management, today we have Mr. Saurabh Gadgil, Chairman and Managing Director. I would now hand over call to the management for the opening remarks. Over to you, Saurabh.
Thank you, Rajiv. Good afternoon, everyone, and thank you for joining us today for the PN Gadgil Jewelers Q3 FY26 earnings call. I hope all of you had an opportunity to review our financial results, our press release, and the investor presentation, which are also available on the stock exchanges and on the company's website. I would like to welcome Mr. Deepak Vijay, who has recently joined the company as the Chief Financial Officer. Coming to numbers, this quarter, gold prices continued their upward trajectory, marking a rise of over 70% year-over-year and 15% on a quarter-on-quarter basis. Despite the elevated price levels, the consumer sentiment remained resilient. The quarter witnessed strong momentum starting with Dussehra, gaining further traction during Diwali and ending on a positive note aided by the wedding season. Traditional gold jewelry remained the core focus, while lightweight jewelry continued its upward shift amid price volatility and shifting consumer preferences. We launched 3 exclusive company-owned stores during the quarter, marking our entry into Patna, Bihar, and taking our store count to 66 at the end of the quarter. Starting with a strong presence in Maharashtra, PNG has steadily expanded its footprints to 5 states across India, with operations now spanning Maharashtra, Goa, Madhya Pradesh, Bihar, and Uttar Pradesh. We have also strengthened our brand and outreach across India by appointing Ranveer Kapoor as the new co-brand ambassador, ushering a new chapter of legacy and modernity. Further, we have also onboarded Sara Tendulkar as the brand ambassador for Lifestyle, marking a key step in strengthening the brand's connection with India's future jewelry consumers. I will now walk you through the financial highlights for Q3 of FY26. For the quarter, consolidated revenue from operations grew by 35.6% year-on-year to 3,302 crores. Gross profit rose by 98.2% year-on-year to 474 crores. EBITDA grew 9.4% to 271.7 crores, while net profit surged 98.6% year-on-year to 170.9 crores, with the net profit margin standing at 5.2%. For the 9 months ended FY26, the consolidated revenue from operations stood at 7194.8 crores. Gross profit rose by 86.8% year-on-year to 957.9 crores, with the gross margin standing at 13.2%, while EBITDA grew by 105.3% to 537.7 crores, with an EBITDA margin of 7.5%. Net profit for the same surged by 104.5% year-on-year to 319.6 crores, with a net profit margin at 4.4%. The retail segment contributed 5,524.4 crores in revenue, a 34.5% year-on-year growth, and accounted for 76.8% of total sales, reinforcing the position as the company's primary growth driver. E-commerce and franchisee segment also reported strong performances. E-com revenue stood at 377.4 crores, registering a growth of 125.8% YOY, while the franchisee revenue rose to 864.8 crores, reflecting a 65.4% increase YOY. On the customer front, engagement continued to strengthen. Our transaction volumes were up by 35%, with an average transaction value, that is ATV, of 103.065, 1 crore 3 lakh 65. Sorry, 1 lakh 3,065. Footfall grew by 33%, supported by a strong conversion rate of 94%, demonstrating sustained consumer interest despite volatile gold prices. Festive demand was a key growth driver in this quarter. with record-breaking sales of 190 crore plus on Dussehra and 606 crores on Diwali, leading to the highest ever monthly sale of 1,800 crores in October month. At the store level, the same store growth continued strong for the quarter was at 33%, and for 9 months, December ended 2025, average revenue per store stood at 109 crores. Revenue per square feet was 3,42,800 with a net profit of 4.8 crores per store. We also witnessed a meaningful increase in the studded jewelry mix, which rose 52%, taking the stud ratio to 8.4%, reflecting a continued shift in consumer preferences towards studded jewelry. The inventory turnover remained healthy at 3.2 times, underscoring sustained operational efficiency and profitability. In the current quarter, we plan to add approximately 11 to 12 new stores, comprising a mix of COCO company-owned and FOCO franchisee-owned stores across Maharashtra and the Central India region, enabling us to reach our target of 78 to 80 stores by March 2026. Looking ahead, we are optimistic about the sustaining growth this momentum with the ongoing wedding season expected to drive further consumer demand. In summary, Q3 FY26 marked another chapter of robust and broad-based performance with strong festive momentum, healthy profitability, and expanding geographical reach. This concludes the financial highlights for the quarter. We can now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pulkit from Delmus Capital Management. Please proceed.
Thank you for the opportunity and congrats on a good set of numbers. So the first question is on gross margin itself. There's a sizable jump Q on Q and YOY. In a rising gold price scenario, one tends to sometimes believe that this might reflect some kind of gold price gain as well in the inventory. Can you help us understand better what drove these kind of gross margins?
Yeah, thank you. See, the gross margins, we had also given a projection at the beginning of the year that we'll see increase in gross margin. Primarily, the first reason was that we had stopped the sale of the zero margin refinery business. Now, that was definitely the key factor which would have impact on margins. Having said that, another focus area for us, which was the studded jewelry mix, that has shown a considerable increase. We have increased by 52% in value, and that has been another contributor to the margin rise. And thirdly, our foray into the lifestyle jewelry segment by LS by PNG, which is more of a diamond and studded jewelry category, is also yielding good results. So all this in combination has been able to give us a good margin increase, and I think this is something which was also given to us as a guidance at the beginning of the year.
So the first two aspects that you mentioned probably may not be as relevant simply because on a YOY basis, that part of refinery is already in the base.
So, no, the refinery was in FY25-26, for 6 months we had the business of refinery.
Yes. So when I'm comparing YOY, I'm comparing Q4 FY25 to, Q3 FY25 had 9.8%, Q4 had 12%. So last 4 quarters,
you're doing quarter-over-quarter, okay.
12%, 12.2, 12, and now 17.4. And studded mix hasn't really changed much quarter on quarter. So I'm really struggling to understand what has changed.
The studded mix has definitely changed. We have seen a quarter-over-quarter increase of 52%. And lifestyle which was not there last quarter. Lifestyle today is standing at 6 stores. So that also has added high margins to the entire business.
Okay. And how much is that to the overall sales?
Sorry?
Lifestyle, how much does it contribute to?
I can't hear you. Can you speak a little louder, please?
How much does that lifestyle business contribute to overall sales revenue? The contribution?
Lifestyle is growing. Lifestyle is not a very big contributor, but lifestyle, if you look at it, should be around 5-6% of the entire sales.
Okay. So in your opinion, there's no aspect of gold inventory gain in this. I mean, you're perfectly hedged.
We are fully hedged, so there is no effect of the price increase on that. Like we had mentioned in the call before that there's only a portion of silver which is not hedged, but that's not a big number. So the primarily margin increase has been due to studded lifestyle and due to a focus on operational efficiencies.
Silver price has gone quite substantial, and you're saying that's unhedged.
It's in Q4. It's not in Q3.
Okay. And lastly, just on your experience in UP Bihar, can you talk a bit more about it, and what are your plans there? What kind of confidence are you getting in terms of expansion strategy?
So the last conference call, we had mentioned that they had started both the stores have started on a positive note. By that I mean that the footfalls were encouraging and were exceeding what we had expected. Q3 has even seen the same thing more amplified in both the stores in Lucknow and in Kanpur. The inventory mix there is more inclined towards studded, more inclined towards fancy jewelry than what we used to say in Maharashtra here. So that another aspect also has added to the growth in the studded category. But the response has been positive. The footfalls are encouraging, and both UP and Bihar, both the states are emerging as good states for the brand. To further strengthen our positioning there, we have also signed up Ranveer Kapoor as the brand ambassador to take the legacy route and establish us as the premier legacy brand in the jewelry sector across India.
Right, sir. So the question is, how many stores can we open there over the next 3 years? I mean, any plans? Is it firmed up yet, or are you still evaluating?
So in the next in this quarter coming, so as you speak, next month we'll be launching 2 stores in UP. There'll be one in Gorakhpur and there'll be one in Banaras. Post that, there's plans to also target more stores in Lucknow, Prayagraj, and other cities. So I think UP as a state can accommodate around 8 to 10 stores is the short-term plan for the brand.
Perfect. Great. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Yash from Edelweiss Public. Please proceed.
Hi team. Thank you for taking my question, and congratulations on good set of numbers.
Thank you, Yash.
So my first question is regarding, if I'm not wrong, in majority of our stores in Maharashtra, the reason for high asset turnover is also because some big chunk of our business come from make to order, right?
Mm-hmm.
So how are you seeing the same trajectory in the newer stores and in newer regions like maybe Bihar or UP? Are we seeing similar trajectory for make to order business? Are the numbers similar over there?
See, we had mentioned when we were in Maharashtra, the made to order had reached up to 40%, and in those states, I think we would be around 25 to 28%. Made to order business primarily works well in the jewelry categories where we have sizing problems, bangles, earrings, fingerings. These are 2 main categories where we do a lot made to order, which also is the same policy there. And like we mentioned before, like we ship it from here to Nagpur, is the same way of shipping it from here to Lucknow, Kanpur, any other place. So as of the model has not changed, the volume there is a little lower than Maharashtra because the state is more towards fancy jewelry, more towards studded jewelry, where we do not do made to order.
Understood. Which means it is right to assume we can have 3.5x inventory turnover over there after this rally of gold prices and everything.
That's right.
Got it. And one more bookkeeping question, like what is the current mix of GML and how we are planning to increase it going ahead?
So the GML is a portion which is, there's GML, there is future options, and then is the old gold. So these 3 primarily are the drivers which are a part of the hedging mechanism. So, depending on the situation, we keep on shifting between these 3 variants. So there is no fixed target as far as just GML is concerned.
Got it. And what would be the current mix of these three as of today?
So if you look at the total sales, the total stock, they would be, old gold would be around 30%, GML should be another 20-25%, and F&O should be the next 15-16%.
Got it. Thank you and best of luck for the coming quarters.
Thank you. The next question is from the line of Gunit Singh from Countercyclic PMS. Please proceed.
Hi, sir. Thank you for this opportunity. So our revenues for Q3 increased by about 38% year-on-year. So I just would like to understand what percentage of this increase is on account of higher gold prices.
On higher gold, see, gold prices for the quarter have seen an increase, but when we are looking at the total revenue, our revenue primarily comes primarily comes from the making charge income. So as long as we are able to generate that making charge income, that is what we target on the company level. When you have higher prices, you see a volume dip, and simultaneously when prices go down, you see a volume hike.
All right, sir. I mean, I want to understand, for example, for the current quarter, gold prices have fallen by about, if I'm not wrong, 15-20%. So I just would like to understand that in a scenario where, say, for example, gold prices fall by 10% or 20%, so how is the revenue expected to be affected by this? And also, I mean, do our margins also get affected by a fall in, say, what would be the effect of fall of 10% in gold prices on our margins also, both revenues and margins?
See, there wouldn't be an impact, but firstly, our margins are not dependent on the gold price movement. Our income primarily is from making charges. So we have typically seen when rates go up, your volumes will take an impact, but the margins would still remain the same because the value of the product is still there. So I don't think it will have an impact on the margins per se. If the gold prices get lowered, we'll be seeing a higher volume, and that would compensate for the margins. So in that scenario, we are kind of hedged.
All right, so is our hedging 100% on gold price movement?
So as far as effective hedging, we are 100%.
All right. So just to repeat what you said, basically, even if gold price remains at the current level or goes down further, our revenue as well as margins should not be affected by a fall. I mean, it should depend on growth in business, or if in case we are adding stores, revenue should go up even though the gold prices fall. Is that the correct understanding?
Absolutely.
All right, sir. Thank you very much. That's all from my side.
Thank you. The next question is from the line of Shivanu from Three Head Capital. Please proceed.
Yeah, hope I am audible. Thank you, sir. Good afternoon. Sir, if I see our franchise segment revenue growth, only 12% year-on-year grew. Why this happened?
Sorry, can you repeat the question again, please?
Why our franchise segment revenue grew only 12% year-on-year?
Which segment?
Franchise segment.
Franchisee segment?
Yes.
See, franchisee is a business wherein we do outright sale. So franchisee has not expanded in the last year. Our focus was more on the company-owned stores. So the state outside Maharashtra we expanded, it was more on the company-owned stores. That is why the franchise business has not seen a growth as far as as similar to what we have seen in our own stores.
Okay, understood. My next question will be, this quarter our revenue mix from lifestyle from 5 to 6%. You mentioned.
Yeah, lifestyle business, because lifestyle we have a format wherein we have independent lifestyle stores, and we also have shops in our big PNG stores. So all in all, that business should be in the range of 5-6%.
Going next couple of years, mix you targeting?
So see, we definitely aim to increase that business because that's the business which is lightweight, it's impulse buying, and it's connecting to the next generation. So, we'll be happy if we can reach a target of 10% with lifestyle.
Okay. My last question is, what will be your FY27 store opening guidance?
So FY March 26, we should be nearing around 80 stores, and I think FY27 we would be adding, depending on the QIP when you do it, but at a company level, which we can look at around adding 25 more stores, combination of Coco, Foco, and a combination of PNG and lifestyle.
20 store, we can expect FY27.
105 stores at the end of March 2027.
Okay. Thank you. Best of luck.
Thank you. The next question is from the line of Vaibhav Mishra from Finvestor. Please proceed.
Hello, sir. Congratulations for the excellent set of numbers. Many of my questions have been answered. I have one question. I think, sir, for FY26, we had targeted revenues in the range of 9,000 to 9,500 crores. And I think we have already achieved 7,200 crores as of Q3. So do we see, exceeding or touching the higher end of our, revenue target of 9,500 crores in FY26? And also, sir, I need to know your outlook on the revenue numbers and EBITDA margin profile for the FY27, given the current gold prices, and how you see the volume growth panning out in FY27.
Long read of questions. So I think FY26, we should be closing a little higher than the guidance we had given. So hopefully we should cross the 9,500 and be close to be 10,000 crores is what we are projecting. The market looks good, and we are on strong momentum, so that looks achievable. Next year, we don't know where the gold prices are heading, and no one can take a call on that. But I think next year we should be able to have a 20% to 25% growth over this year. So around 12,000 crores is what we should be able to target for FY27.
All right, sir. All right. Thank you so much, sir. That's it from my end.
Thank you.
Thank you. The next question is from the line of Shivam Shukla from FinVenue. Please proceed.
Yeah. Good afternoon, sir. Am I audible?
Yes, you are. Go ahead.
Yeah, sir. I had a question on the sales growth. So while comparing ourselves with the industry peers like maybe a Titan or Kalyan Jewellers, so overall industry growth was somewhere around 40 to 43% odd on the revenue front for Q3, and we, PN Gadgil, being a little smaller player as compared to these two companies. So don't we think that our revenue growth could have been better as compared to, on the league of a little higher than, these big players? So just wanted your insight on this.
I think I can't comment on what the other players are doing. We are sticking to our guidance. We are sticking to what projections we had made. And I think the store growth, the volume growth is not just coming, just from the existing stores. It's also new store additions. There are a lot of various factors. So I think as far as we are concerned, we can talk on our company. We had projected and we have exceeded that projection. So I think all I can say is that we are on track to meet our guidance or to exceed our guidance.
Okay, sir. And sir, can we get figures for the volume growth for Q3? The gold jewelry volume growth?
The volume growth for Q3 would have been in the range of around 25% plus.
Volume growth 25% plus. And sir, we, as far as we remember that we had a guidance to increase our stud ratio going forward. So any comment on stud ratio? I mean, on further improvement or the process how we can improve it from here on.
We speak, there's an improvement. See, firstly, the studded category has seen a 50% plus hike, growth. Secondly, we launched Polki and Kundan categories. So when you consider diamond, precious stone, Kundan, Polki, we would be close to 10%, as of December end. So there's a considerable improvement on that front, and the company focus would still be to take this stud ratio to 13 to 14%.
So in next 2-3 years?
So yeah, ideally we should look at next 3-4 years.
3-4 years. Okay. Okay, sir. Thank you so much.
Thank you. The next question is from the line of Priyanshu Jain from GrowthX Infinity. Please proceed.
Hello. I'm audible?
Yeah, you're audible. Go ahead.
Hi, sir. For the next year, you said the stores. So can you give the bifurcation as well?
Bifurcation of?
So, like for the lifestyle and the other stores.
For the next year, we have out of 25 stores which we had planned, it will be a half and half. So 50% would be lifestyle, 50% should be PNG, is what the plan is. Again, in both the categories, it would be Coco and Foco, a mix of that.
So, and we have seen some reduction in the Foco model, franchisee or own company operated. So, are we have any plans to like ramp up this process as like other competitors which have done in the past going forward?
Our strategy in the neighboring states of India was first to have a proof of concept and have a company store. So we have done that successfully both in UP and in Bihar and in MP. So now in the coming year we'll be looking at accelerating franchisee growth in those states. In Maharashtra we kind of are the market leaders, and we have tapped almost all the major markets here. That is why we were not keen on adding more franchises here. But in the coming year you will see franchises coming up in all the states where outside Maharashtra, where we are already present.
Okay. And so, like last two questions. So, like this year we will do somewhere 9,000, 9,500. Next year we have any internal plans which we are targeting to implement next year?
Internal plans, as in you mean the revenue targets, or what do you mean by internal plans?
Yes, sir. For the revenue as well, and the EBITDA margins we are expecting or maybe sustainable going forward, because we have get a better margins this quarter. So like are these 8% plus margins sustainable going forward?
See, if you look at the margin, EBITDA margins for the Q3 are always on the higher side because of the big festive season, Diwali, which is in that quarter. On an annualized basis, we had projected that we will see an increase in margins, EBITDA margins, and that should be sustainable at 7%, 7 to 7.25% is what we feel. A PAT margin is around 3.75% to 4% is what we feel is sustainable in the long run. In terms of the target, we should be targeting around 11,500 to 12,000 crores for FY27 as of end of March 2027. And we expect that we continue growth in the focus area of Central India, as we had mentioned before.
Okay, sir. That's all from my side. All the best for the future. Thank you.
Thank you. The next question is from the line of Rahil from Sapphire Capital. Please proceed. Mr. Rahil,
hello,
your
can
line
you hear
has
me?
been unmuted. Yes, sir.
Yes, hi. So, actually my question was on EBITDA margin. So the 7% which you achieved this quarter, which is like a good high compared to the last few quarters, this is sustainable for coming quarters, right?
Yeah, that's what I said. In Q3, the margins were much higher, EBITDA margins for just the Q3. But overall, we see on an annualized basis, 7% is what we feel is sustainable.
Right. Okay. And I just couldn't hear. So you said 25 stores in FY27, the mix of Coco and Fofo or Foco? I was not able to.
We don't do Fofo. It's only Coco or Foco. The franchise or company operated.
Correct. Okay. All right. Got it, sir. Thank you so much.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Raj from Finvestors. Please proceed.
So we have very aggressive plans of store openings. Right now we are having stores 67 as of today, and we are planning to have 78 to 80 stores by this financial year. So how confident and what is our actual plan, and what is the reasonable number to reach by FY26, and also keeping the gold price rise in the view that has been drastically increased. Are we seeing any volume growth in Q4? And the last question will be, how can we
We
see
take
our
question one by one instead of asking so many questions together. So I'll just answer your first question in terms of number of stores. We are currently at 66 stores as of December end, and by March end we already have plans. So the work is going on. Stores are finalized. So we are confident reaching 78 to 80 stores by end of March. 25 stores to be added next financial year. Like I mentioned before, a mix of Coco and Foco, and PNG and Lifestyle. So the Lifestyle store format, our smaller store format, 1,000 to 1,500 square feet. PNG is around 3,000 to 4,000 square feet. So the confidence to achieve the numbers for March is almost there, and the work is going on. So that should not be a problem as far as the achievement of number is concerned. To answer on your volume growth, as of Q3, we had seen a volume growth in gold of 25%. So I think both in value and volumes, there's been growth in Q3, and Q4 is going on, so I can't talk on the current quarter as we speak.
Okay, sir. Right now, sir, we are only left with 50 days in this quarter. So are we seeing, sir, any spark of volume growth in Q4?
Yeah, I can't give you anything which is on the current quarter, but all I can say the momentum is strong, and we should be able to meet our guidance or exceed the guidance what we are given for the year.
And so the last one will be, sir, on the gross margin, sir. The gross margin in this quarter, sir, as you know, that is a very good quarter, so it is elevated. So what could be the reasonable gross margin for the whole year and going forward to look at?
So we have always mentioned that around 13 to 14% gross margins is something which should be sustainable. EBITDA at 7% and PAT at 4%.
Okay. So out now we are doing, sir, 4.4% PAT margin till 9 months.
Yeah.
So we should target below these numbers.
You see, it's always the Q3 is always a high month. So when you talk of a minimum margin maintenance, I think 4% is what we should be able to maintain, which is quite a big increase over the last 2-3 years.
Okay. No, fine, sir. Thank you very much, and wish you good luck for the future.
Thank you.
Thank you. The next question is on the line of Gaurav Shukla from Finvestors. Please proceed.
Good afternoon, sir. My all questions have been asked. Thank you, sir.
Thank you.
Audible?
Yeah, thank you.
The next question is from the line of Ankul from Inved. Please proceed.
Yeah, hi, sir. Thanks for the opportunity. Sir, firstly, my question is on the side of QIP. What are our plans over there?
So the QIP plans, like we are saying, that we have taken the approval from the board, which is good till end of August 2026. Having said that, we have always mentioned that the QIP will primarily be to fund our expansion ahead. So we are right now looking at the geopolitical developments, the positives on the India-USA deal, the India-EU deal are factors which are in favor. So let's see how things shape up, and then once we are able to come to some conclusion, we'll be able to communicate better to you.
Understood, sir. Understood. So my next question is, as we are sticking to a guidance or we may cross our guidance of 9,500 crores. So where is this growth coming from? Is this from the new stores or is this from the existing stores?
It's a combination. Look at SLP also is upward of 50%. So the growth is coming both from the new store and from the existing store. Also, e-com as a function is doing well. So we are seeing sustained efforts being paid off in terms of the right merchandising, right communication, marketing. So I think we are also able to garner a lot of share from the unorganized sector, which also is adding to the growth.
Got it, sir. Got it. Understood. Lastly, any guidance on the volume growth? How much can be expected? Anything on that front?
So volume growth, as of December, there was a 25% plus growth in gold volumes. I really can't talk anything on this quarter here because it's going on. But I think, like I mentioned before, volumes and value, play interchanging role when when gold prices go up, volume decline and vice versa. But I think overall, we look to be in a good position to achieve our guidance.
Understood, sir. Yeah, that's it from my end. Thank you so much, sir.
Thank you. The next question is from the line of Yash from Edelweiss. Please proceed.
Yeah, thank you, team, for the follow-up. So, sir, I wanted to understand better on the style part of the business. Like you already alluded a good guidance for the expansion of the same. So, where are we planning? Which states or city we are planning for this expansion, and how different the customer segment is compared to PN Gadgil?
So see, lifestyle as a category was primarily meant, like I mentioned in the previous call also, as a bridge between the PNG customers and the customers of tomorrow. So lifestyle is very design-oriented, high fashion, high glamour jewelry, but light on the pocket and having around 35-40% studded in the entire merchandise. So Maharashtra is still, quite open for lifestyle because we have not really expanded in Maharashtra. So the focus will primarily be on Maharashtra. When you speak on Maharashtra, I think in the coming year we'll be looking at having more stores in the bigger cities of Maharashtra like Mumbai, Pune, Nasik, Nagpur, CSN, Sholapur, and these kind of places. Online also would play a very important role in lifestyle. And having said that, lifestyle will also be into various malls in different cities. The year after that is when we see the lifestyle really moving outside Maharashtra and moving into the other states where PNG is present. But we feel that this is a brand which has huge potential. It is something which is in demand by today's consumer. And if when you ask for the product, it's very, very differentiated. So designs in lifestyle, the merchandise is completely different than of PNG. So you will not find the PNG products in lifestyle and vice versa. So there is a separate design team, a separate merchandising team, a sourcing team for lifestyle.
Got it. Thank you, sir, for the answer.
Thank you. The next question is from the line of Tushar Verma, an investor. Please proceed.
Yeah, hi, sir. Am I audible to you?
Yeah, Tushar, go ahead.
Yeah. So I have two questions related to retail segment only. First is retail EBITDA margin excluding other income have increased from like 6 to 7% in FY25 to 9% this year, around 8 to 9%. And similarly, PAT margins has also increased. So what are the key drivers of this sharp margin expansion as this segment does not include bullion sale as well?
See, retail has been a focus area for us because after the discontinuation of the non-margin refinery sale business, retail has been a major contributor for the entire sales drive at PNG. 2-3 factors which have helped the retail business has been that the introduction of lifestyle, which again is a high margin business, our focus again on the studded category, addition of Kundan Polki and in the merchandise mix, and the movement to central India in UP, Bihar, where again the sales of studded jewelry is on a higher rise. So all these factors have been able to help us to increase our margins for the last quarter.
Okay, and the second follow-up question on same retail segment only. Like you said, sustainable growth margins are 13 to 14%, EBITDA around 7%, and PAT around 4%. So what kind of sustainable EBITDA and PAT do you think for retail segment only? And additionally, could you please share the trend prior to FY25 of retail EBITDA and PAT margins?
See, retail EBITDA we should be in the range of sustainable should be around 8 to 8.25%. At a company level, we're talking of 7%. So I think this is what we feel is sustainable. Retail will benefit from the higher focus of studded, from the higher focus of lightweight jewelry, and as we are merchandising also is moving more toward lighter weight, would also mean higher margins for the side of business.
And PAT margins of this segment, sustainable PAT margins, and the trend if we have prior to FY25 sustainable margins.
Prior to FY25, I'll email to you because we don't have it offhand right now. But if you want the previous data, we'll email that to you.
Okay, just the PAT margins for the retail segment, sustainable PAT margins, like you said, 8 to 8.25 for the...
Previous data, you want the future data. What are you asking for? PAT margins?
No, like you said, 8 to 8.25 sustainable EBITDA for retail segment. So similarly, what kind of PAT are sustainable for this segment?
PAT for retail segment?
Retail EBITDA. Yes.
So retail, I think PAT in the range of 5.5 to 5.5 should be sustainable.
Okay. Thank you so much, sir. Thank you so much.
Thank you. The next question is from the line of Nitin Jain from Fair Value. Please proceed.
Yeah, my questions have been answered. Thank you.
Thank you.
Thank you. The next question is from the line of Rajiv Bharti from Nuvama. You may proceed.
Yeah, good afternoon, sir. So, question is on other expenses. So, other expenses have gone from 85 crores to 190 crores nearly on a YOY basis, right? So, can you break that up? What's basically shooting this kind of surge?
The other expenses, primarily the increase has been in the advertising expenses because the number of stores have increased from 47 to 65. Expansion in newer states of Madhya Pradesh, Uttar Pradesh, Bihar. Signing up of Ranveer Kapoor and Sara Tendulkar as brand ambassadors has been the primary driver. Again, increase in commission and brokerage from e-com also has seen an increase. Also as e-com sales have gone up, also the commission and brokerage also have gone up. So this has primarily taken up the other expenses. But having said that, we'll still be able to stick to the 1.5% level of marketing expenses of total turnover as we had given the guidance in the last call.
Sure. The other question is on the segmental growth. E-com has grown by nearly 140%, right? And my understanding is this is basically coin sale, and this is ideally a margin dilutive bit, right? Potentially both on the gross margin and EBITDA margin side, and which is basically growing faster than the company. So can you explain that bit, why it has not hit the margin? And other part is when you said 25% volume growth, this you're talking about putting all channels put together, right? And if I, let's say, strike out 25% from the 36% number, ballpark we'll get something like 10% growth on the pricing. But the pricing is materially, significantly more higher, right? So what am I missing here?
So see, e-com, like you mentioned before, the driver, the e-com sales driver is bullion, which has been also the case. Investment demand has gone up also on the physical side. But e-com, is not a margin diluter. It's a net margin business for us. So e-com, even the bullion business does, a margin of around 1.52% on the bullion. So that's something which again is a margin business. But the volume, the growth has been quite large there. But we also been able to grow on the jewelry side. Though the numbers would be small compared to bullion, but jewelry sales, gold jewelry, diamond jewelry, and silver jewelry all have shown good significant increase in e-com. E-com also is a tool for omni-channel where people browse online but buy offline. So that's again an area which is a focus for us. When you talk on the margin on the volume bit, 25% when you talk on the entire increase. So that's over the last quarter, talking about quarter over quarter. So to answer your question, gold, this was last quarter versus this quarter. So it's a Q over Q. So we have still grown 25% in volume over last quarter.
Okay, can you call out what is the YOY volume increase?
So YOY volume increase would I think be a single digit or maybe flat.
Okay. You're saying there is still growth because I thought the price itself is, I think, upwards of 60% growth, right? Even if you adjust for mix, there should be a volume decline.
But we also added number of stores. So like I said, from 47 to 66 stores, we also added more number of stores.
No, I agree. What I'm saying, the overall growth is 36%.
Everybody, the whole industry has seen volume degrowth. What is the industry is focusing on are the margins being able to maintain, and the margins, as you know, come from making charges. So as long as your making charge income is intact, the margins would not be affected.
No, fair point. Fair point. That's all from my side. Thanks a lot.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Nitin Jain from Fair Value. Please proceed.
Yeah, thank you for the opportunity. So you have given a guidance of around 20 to 25 store openings for next year, which is a very strong guidance. But your revenue growth guidance is around 20%. So can you please elaborate? Are you seeing any slowdown in the market, or what could be the reason?
So see, when you say 25 stores, I'm talking of the PNG store and the lifestyle stores. The lifestyle stores are smaller, compared to PNG. So PNG store typically would have an inventory of around 55-60 crores. A lifestyle should be in the range of around 10 crores. So when you try to look at the entire number, 25 stores would only mean around 12 to 13 or 14 PNG stores and a balanced lifestyle store. That is why on a gross level, the revenue increase would be at least 20%.
Thank you. The next question is from the line of Aman, an investor. Please proceed.
So, thank you for the opportunity. My first question is regarding the QIVs. So could you please share a rough timeline and how the funds are going to be used?
So like I mentioned before, we have not yet freeze on any timelines for the QIP. The resolution is effective till August of 2026. So we are still working on that, and once we confirm, we'll be able to be able to communicate with you.
Okay, and my next is some doubt regarding the lifestyle store. So when we compare with your peers like Kalyan and Tanishq, so first they expanded their core store pan India before the lightweight jewelry format, but where we see in the PNG is still at very early age, and they feels like bit aggressive towards the lifestyle because you are allotting 50% of the total store for next year to lifestyle. But when we compare the sales coming from the lifestyle is around 10%. So do you think that it's still worth to be?
So see, I'll tell you, it's a very seriously planned discuss with the management. On one side, we're looking at higher gold prices. Other side, we're looking at a lot of new generation customers who want jewelry not on an occasion but for their own occasion. So we have always mentioned that PNG is the demand driver is primarily festive and wedding, while lifestyle will be more towards own occasions, personal birthdays, anniversaries, gifting. So this is a new trend which is emerging, and we want to be a part of this trend. When you talk on expansion, we have done expansion which is not over aggressive. The stores of PNG would be completely funded from its internal accruals, and that's why we are given this guidance wherein we said that 25 stores, half would be PNG, and out of that half would be franchisee. So the whatever growth from PNG, that will be also internal accrual. We would not need any further debt to expand and to fulfill this growth. So it's a well thought strategy, and it's something which the company is confident about.
Okay, thank you, sir.
Thank you. The next question is from the line of Meet Mehta from Prasun Exponential. Please proceed.
Hi, thanks for the opportunity. I just wanted to ask, like you are planning to expand in other states and cities, so are we seeing any dip in revenue per square foot or anything like that? If you could throw some light.
Yeah, as we expand in new cities, definitely the break-even would take around 18 to 24 months. So the revenue per square feet of established stores would always be higher than the newer stores. So considering what we have, the update we gave right now of around 3.5 lakhs for 9 months revenues total. So this includes the companies, old store, new store, everything put together. So I think it's still one of the best numbers in the industry, and we are hopeful that we'll be able to continue with this trend.
Okay. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Raj from Finvestors. Please proceed.
Thank you for taking my follow-up question. We are having start ratio of 8.4%, whereas our peers are having in double digits, and some bigger peers are in high teens. So, what is our plan to consolidate or just take advantage of having a greater start ratio?
That's a good question. Primarily, we were only in the state of Maharashtra, which primarily is a gold market. So if you look at all the south-based players and Western India-based players, gold rules the roost. But for the last 7-8 years, the focus has been to increase the studded ratio, which has now come to almost 10% when you take Kundan Polki into account also. Now, as we move towards Central and North India, which are typically more studded and diamond markets, this will see a natural increase also, and a focus for the company. We will take it further. So I think we would also aim to be able to reach the margins on the numbers as the other players have once we are able to go pan-India. But having said that, in the next 3-4 years, we are aiming to take the ratio to 13-14%.
That's great. Thank you very much. That's all from my side.
Thank you. The next question is from the line of Shivam Shukla from Fin Avenue. Please proceed.
Yeah, thank you so much. Sir, I just wanted to reconcile the fact that our shareholding is still above the 75% benchmark. So, any plans for equity dilution in the upcoming year? Or
that is what I've said. That we are still not finalized the QIP plans, nor the plans for any promoter stake sale. So as and when something is finalized, we get back to you on that. But yes, as per the SEBI regulations, in the 3 years we have to get down the shareholding to 75% of the promoter group.
Yes, sir. Yes. Okay.
Thank you. The next question is from the line of Dinesh Kulkarni from Finesight. Please proceed.
Hello, sir. Am I audible?
Sure.
Okay. Thanks for taking my question, sir, and really great set of numbers. So my question is, pretty simple. Have you seen any trend over the last 6 months, over the last 2 quarters, where the customer's preference is more for the gold bars or solid form rather than the jewelry, just because there is such a surge in prices that people just want to hold gold rather than in the jewelry form?
So see, definitely there's a shift in investment demand, which is further gaining traction, and we're seeing a lot of newer players in the market looking at investing in gold, both physical or in the online format. So that is definitely there. But as far as weddings, festive demand is concerned, jewelry is the only option there. Old gold, people are swapping old gold for new jewelry. So that trend has increased, and today almost 40% entire purchases are financed by old gold from people's households. So jewelry sales are there. Jewelry sales will continue. Weddings, festivities are days when jewelry sales are big. So investment demand as of now has seen an increase. So if you had seen a ratio which would have been 15-18% of bullion and the balance of jewelry, today it could be in the range of 25-26% bullion and the balance jewelry. But jewelry in India is different. It's sentiment, it's part of festivity, part of our culture, and I think that will still remain the same.
Yeah, I understand that. Perfect. Sir, just then on the similar lines, so do we have any difference in operating margins for when say, like as you mentioned, the percentage of ratio is increasing towards the bar side. So are we expecting any change in margins because of that? Assuming the gold prices remain very high and the demand for the solid form is higher than the jewelry form?
I think I don't see bullion sale will further increase than what the current ratio they are. I think it's quite a high number. If two-thirds of your business today is still jewelry, I think margin should not be impacted. I think even if prices go higher, margin should not have a negative impact.
Okay, so at least we should be able to sustain those margins, right?
That's right.
Okay, and sir, last question from my end. So how are we looking at the capex, sir? Maybe like capex per store or the overall terms for the next 2-3 years as we are expanding, into different geographies.
Capex for our PNG stores around 2 crores in terms of the store fit outs, and around 70 lakhs for the lifestyle stores. The franchisee store, the capex is borne by the franchisee, so that is not a cost for the company. And inventory wise, like I mentioned before, we need around 55 crores of inventory, gold, diamond, silver put together for the company stores, and for lifestyle should be in the range of around 8 to 10 crores.
Okay, so we are not expecting any major change in these numbers going forward, right?
If the prices go up, by that percentage, the store inventory will go up. But
okay.
That's we don't see any further change in this.
Okay, that sounds great, sir. Thank you very much, and all the best.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to the management for the closing comments. Over to you, sir.
Thank you, everyone. We truly appreciate all the participants for taking the time out to join this call and for your insightful questions. We hope we'll be able to address them to your satisfaction. If you have any further queries or would like to know more about the company, please feel free to reach out to our secretarial team and to our investor relations partner, XB4 Advisory. Wishing you all a great day ahead. Thank you.
Thank you. On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you may now disconnect your line.